Welcome to this bonus episode of FieldLink. As we dive into the short and long-term commodity market impact of the war in Iran, we will cover everything from energy, fertilizer, and grain, and what that means to U.S. producers as we prepare for the 2026 crop season. Jody Lawrence from the FieldLink Market Report will join us for the latest insight. Stay tuned for this bonus episode of FieldLink. And welcome back to this bonus edition of the FieldLink Podcast. On this bonus edition, we are going to sit down with Jody Lawrence from the FieldLink Market Report. And Jody, we're going to talk a lot about some of the impact that's happening across the Middle East and really around the world because of the recent war in the Middle East. We've got a lot happening in Iran, as well as surrounding countries over there. Jody, let's talk a little bit about what we're seeing from an impact. We're going to cover everything, right? From energy to fertilizer, as well as grains, and what that means to growers in 26.
Yeah, this has really been, we always talk about black swans and things that really impact our markets that we never see coming. And although we knew that action against Iran, when they started missing deadlines and things, was certainly a possibility, I think the industry and everybody assumed that it would be one of these knock out the nuclear facilities and the infrastructure surrounding their uranium enrichment program and, be done and move on. But it just mushroomed out that they were wanting regime change. And when they knew that all of the leading clerics of Iran were all going to get together, that they couldn't have had a better opportunity for what they wanted to do. So when they took out the Khomeini and then the other 40 around him, that is what has really kind of snowballed this into a much bigger thing, because with the joint strike of U.S. and Israeli missiles, it really brought the entire region into it rather than just a U.S. taking care of the uranium enrichment plant. So what was, I think, surprising to the rest of the world that caught everybody off guard, not that Israel was involved, but that Iran started to send missiles and take shots at their neighbors in Oman and Saudi Arabia and other people that you think would be, neutral to this, or at least Iran would not strike out against. And then when the threats escalated to, we're going to shut down the Straits of Hormuz, that's when the whole thing really just took off. And you saw what happened Sunday night with the final kind of explosion of crude oil going from, had been creeping up from the mid 60s to the mid 80s last week. And then when this started, and Sunday night we open up and you have crude oil trading almost $120, almost $30 higher. And then over the course of Monday, you have a $35 range in crude oil that I've read something, I'm not sure this is true, but like 40 of the past 50 years hadn't even had a $35 annual range, much less in, a daily range. So as crude oil went up, all the biofuel components went up of ethanol and bean oil, and that drug has really, really sparked big rallies in corn and beans. We got to 498.5 in December corn Sunday night, and beans continue to climb even higher today. On some of that is certainly crude, because crude is hanging out just under $90 right now. But there's also expected to be the announcements of what the EPA recommended on the new RVOs and RINs to the White House, that should be coming out within the next week or two. And the market certainly seems to think that it's going to be bullish bean oil, which by proxy is bullish beans.
I think it's really important for our listeners to really understand the impact that this region has on American agriculture. The Strait of Hormuz, it's certainly caught a lot of headlines here recently. As you pointed out, Jody, it's absolutely impacted, the energy market, oil specifically. There are certainly other areas that are going to be impacted. But when you really look at that Strait of Hormuz, you're looking at about a 20-mile stretch from coast to coast, but the shipping lanes is about 2 miles in reality. And that's really where the impact's at today because the Iranian Navy has put several mines throughout that region. And President Trump last night called them out and said no more of the mines or there will be, basically hell to pay. That's what's really impacting all of these markets today is that 2 mile stretch. Is that right, Jody?
Yeah, because and these numbers, I've got confidence in because I've confirmed them several other places. 20% of the entire world's oil supplies goes through that Straits of Hormuz, and that is a major area where China buys their oil from. So this is directly impacting China on their availability to get oil, from their normal sources. 20% of the world's natural gas goes through there, 25% of the anhydrous, 25% of the urea. All of this goes through there because a lot of it is mined or produced, naturally in that area. And we know that over the weekend, as soon as the bombs started falling, that the price per ton of urea went up $100 and more in some areas, but it's just been all over the board. And then you think about it, if the straits are shut, although a few ships apparently have gone through, but if there are mines out there, nobody is going to take a risk on that. That
right.
If you have a real urea shortage, not only will the price be extreme, but for everybody who may have missed their prepay window and not had the deliveries that they needed, that may be something that really dramatically affects the acreage numbers that you are going to make here in the next 6 weeks to 2 months when planting starts. Because if you don't have enough nitrogen to follow up on the corn, awfully difficult to think about trying to under fertilize a corn crop at these low prices when what every farmer is trying to do is out yield the lower prices. Of course, we've got a rally in price, which I do want to get to with the next question. But, we've just got so much stuff. If you think a third of the world's fertilizer goes through there and the wide stretch of what that happens, because let's just talk about people in the northern hemisphere. China gets a big portion of theirs that is coming out of there, and they're going to be fighting the U.S. and all the other, and Europe and everybody else in the northern hemisphere that is about to start planting for that fertilizer. So that's why it's going to go up, because I don't think the CFs and the potashes of the world that have available supply elsewhere in the world are going to give anybody a discount just because of the straits are closed. So I think we're really going to have, if they stay closed, another week or so, even as short as that, we're going to have a real free for all for some of the nitrogen inputs that we just really, really count on to grow these bumper corn yields.
Jody, I've seen some recent reports. Farm Bureau put out some sources for U.S. fertilizer in 25. And I think it's important for American producers to know where their fertilizer is coming from. Certainly Canada is number one, around 52%. Number two is Russia, and they're in a war right now and have been for 4 years, still pulling in close to 20% of the U.S. demand for fertilizer. But then we get into the area that we're talking about. We get into Saudi Arabia. Qatar is number three, followed by Saudi Arabia, and Israel is number 6. So this is a very important geographical area for the United States as well. Not only the globe, as you pointed out, but boy, the U.S. is pulling a lot of imports for fertilizer from this region as well.
It's such a world market with what you look at, what comes out of there. And it's not just an isolated, okay, this will affect, India, someplace like that. It's going to affect everybody because everybody is battling for now what is a shrinking supply of fertilizer. And it's very wide ranging, and it's just like with the gas prices, you saw them shoot up immediately at the pump. And even though crude is, at a higher than normal cost right now in the mid 80s, it's certainly not anything we haven't seen. Shoot, it got up to what, $125, $130 a barrel in 22, 23, right after COVID, and when that big inflationary period came on. So it's not, historically high, but when you see prices shoot up that quick, we know that they never come down nearly as fast as they go up.
Yeah, slowly retracts for sure. Okay, Jody, so let's talk about the grain markets, commodities. What's corn doing today as we're recording this podcast?
Corn is having a really good day. It's up 8 3/4 now. You've got corn is up 8.5, both in May and December. So you've got December 26 pushing up to 488 right now, sitting just under, just a dime off the contract high at 498.5 Sunday night. You've got old crop beans up 22.5 and November beans up 14. And that is somewhat in participation with crude being up $4 a barrel, but also with the expectation that the EPA really is asking for some big new biodiesel and potentially, sustainable aviation fuel. Just a lot of ripples that'll come out to why we're seeing such a big rally, which is really surprising everybody, because you look at beans, Brazil and the rest of South America in the middle of harvesting an 8 billion bushel record crop, and they're far enough along that it's certainly in the world pipeline. But if we're going to have world inflation, you have a lot of speculative funds out there who are wanting to own hard assets and raw materials, and we are certainly seeing a bid from that, because it's hard to fundamentally justify beans being at this price, because we never thought we'd get the chance. And on the back end of it, you start to think, if there's a fertilizer shortage and you've got to switch corn acres to bean acres, then the U.S. plants maybe 1.5 million more bean acres because of it. Then that really kind of goes in contrary reason, to why beans are going up so much. Because if we're going to end up with extra acres in the U.S. for another, potentially record crop here on top of the South American record crop, beans are the one in this that to me is the most curious, because you can understand the rest of the the rest of the market because of the disruption in the straits, but it's beans that I think we're really going to have to be careful about, that when those new numbers from the EPA come up for the RVOs, that we have to have some protection under it. Because let's just make an assumption that beans, you can get $11. It'd be a steep basis at 67, but just for easy math, you're going to, at $11 cash beans fall delivery, you have a 60 bushel yield, $660 gross income per acre. That should certainly be profitable for just about any grower, and you can work your way up and down the yield spectrum with that. So it's interesting times, and these are certainly the biggest rallies we've seen, non-weather related. And gosh, I can't even remember the last time a major policy shift was like this.
We're probably going to COVID, aren't we? For these kind of big shifts?
Yeah, and I take that back, because 3 years ago when Russia invaded Ukraine, certainly the wheat market went crazy, and that pulled everything with it, because wheat went into $14, $15 range. But yeah, this is the kind of thing that you have to be. There are two things that we try to separate in these meetings. First of all, nobody's happy that there are lives at risk here, whether it's
Right.
whoever's life it is. You never want war to be the base for a trading strategy. when we're talking about a marketing plan. But you have to address it because with crude oil going up, and now at 90, you're $35 off the low of earlier this year at $55 a barrel. That you have to say, okay, I now have a lot more money. Beans have rallied 70, 80 cents, and you think about that at 60 bushels an acre, you've got an extra 45 to $50 an acre of income that you hadn't really planned on before. And with corn, you're north of 100 if you're getting on the 40 cent rally that we've seen. So you've got to take all of this with the reality that you still have to market. You can't wait and see how high is high, because I've seen some analysts say that they think crude oil could go to $150. And if crude does go to $150, then corn and beans, because of ethanol and biodiesel, would certainly continue higher. But that seems like an awfully big risk to take, considering the volatility we saw Monday and how much and how quickly everything pulled back from those highs. So always a grain of salt to be taken with everything here, that you still have to market your crop. And if you're in a position where you did all your prepay, you've got everything delivered, you have everything you need, you have to have your break-even number with a normal yield and be selling into these rallies, because these are some opportunities that we honestly never would have expected unless the U.S. had a weather problem later this year.
Your point is so true. What goes up can come down fairly quickly. We're on the uptick right now. There's a great opportunity for producers to take some action out there. Jody, this war has been in effect for 12 days now. It's looking pretty good that this thing couldn't come to, I don't want to say an official close, but certainly slow down a lot based on the reports we're hearing on the news media in terms of what's going on in the Straits as well as throughout the entire Middle East. That could temper some of these prices here pretty quickly.
Absolutely, because we want it to end. Everyone would like the war to end, but the prices to stay. But we know that that's not going to happen. And you have to assume just the sheer firepower that the U.S. has of still in reserve, and how diminished Iran is in this. It's going to end at some point. And whether it ends in a ceasefire and the straits reopen tonight or in a week, at some point, this is going to settle back down to where we were. And that's why you have to take advantage of these kind of black swan rallies, because they're certainly adding onto your bottom line right now.
Well, and that's all the reason, right, Jody, here at the FieldLink podcast and the FieldLink Market Report, we ask our folks, listeners, customers to log in and register for helenaagri.com to get the FieldLink Market Report, and also click on that button for the SMS texting. So, Jody, when these big markets move, our customers can be alerted. Is that right?
Yeah, that's the whole process of what we're trying to do with this. We've talked about this 100 times, that the information is great, but we're really in the education market. We're trying to gather together all of these facts and give them out in a helpful way that the average farmer just doesn't have the time to be able to sit down and go through 20, 30 pages of stuff, listen to other podcasts, other news sources, watch CNBC, all those things. So that's why this is, I think this is going to be very valuable in the future, how we're going to do this, and big time in an event like this. So
yeah, absolutely. Now's a great time to be taking advantage of some of these market upticks as growers get ready to plant 26. And we've certainly talked about corn and soybeans, but boy, other crops are impacted as well. Let's talk a little bit about wheat, Jody.
Yeah, wheat always seems to be more sensitive to the Middle East and obviously the Russia-Ukraine, simply because that's their base for all their diet. So much wheat is part of their normal day-to-day diet. And you think about all those ships that are just stuck there whether they were about to drop something off or whether they were going to then get reloaded and bring something back. There are an enormous amount of wheat exports out of that area that come out of the North African wheat harvest and out of that area in the Middle East, up to Russia and Ukraine through the Black Sea, what may come over and go that way to get delivered. Also, that once you stop one ship, it's not necessarily it's just crude oil, because while they're more specialty, you could have wheat supposed to be coming out on a boat that's stuck on the other side delivering, something else. So it's just the whole shutdown of the straits that really has activated wheat, and wheat's been an impressive run because there's so much of it in the world. And Russia's cash price is still roughly $1 under the futures. But you look Sunday night, it got all the way up to 649 and three quarters, 650. And
Wow.
just at the end of January, it was trading 533. And $1.20 wheat rally is enormous. You're at that point, you're at a 25% rally on a price of something that certainly hopefully everybody's taking advantage of it, because this is the best price we've seen in wheat or at least Sunday night was, going back to last July. And if you go past that, for almost all of 2025.
Yeah, definitely some major moves in really all of the commodity markets right now at this point. Jody, any tips of advice for folks here to take action here in the next really days versus weeks?
Well, there's one thing I want to set up the recommendations with, and nobody likes to see the price of gas going up, because what it really is, they always refer to it as a tax at the pump. But farmers benefit more from higher gas and diesel prices than any other industry, except, obviously the oil industry. And this is some math that we've put together. The new relationship, or the growing relationship, because we're going to use almost 6 billion bushels, 5.8 billion bushels of corn for ethanol this year. But think, and then the green biodiesel and the other things with the bean oil, that we really are almost in an energy proxy when you are raising corn and beans these days, corn in particular, because think about the math on this. And this was done last Friday. I know that the price of diesel's changed a little bit, but this is you get the idea from this. For every 1,000 gallons of diesel you use annually on farm, and talking to farmers, we're going to use 4 gallons an acre as kind of a rule of thumb. The $1 a gallon rally that happened in diesel cost the farmer, for every 1,000 gallons used, cost them $1,000. Okay, that's easy math to do. But what I think a lot of people don't equate out to, they just see the rise at the pump and they kind of stop there. But for every 10,000 bushels of old crop corn that they had in the bin or have in the bin, the current rally made them $1,200 for every 10,000 bushels.
Wow.
For every new crop bushel for the December corn, the crop that's going in the South and about to be going in as we head further north, you made $1,500. So just in corn, you are making more money because of the subsequent rally than you're paying in diesel cost. Now, the bean math is even better, that if you had old crop beans, and like I said, this is not all just Iran related. It's got something to do with the new EPA announcement that's expected. But the beans have gone up to where you, on 10,000 bushels stored, you made $3,000, and on new crop, you made $1,850. So if you have a combination of those, however it would work out, the average farmer in this realistically made about $7,500 more dollars for every 10,000 bushels of corn and beans combined, old and new crop, for the $1,000 that they're spending extra on diesel. So we got to keep that in perspective, how close a relationship we have with the fuel industry anymore. and we will going forward forever.
I think that's really great insight, Jody. It's kind of the old Paul Harvey, the rest of the story. And it's sometimes really important for us to step back, take a deep breath, and peel that onion back and really see how these, energy prices are absolutely going to impact us at the end in terms of return on investment for our crop acreage.
Absolutely. And you asked about recommendations. And one thing we're certainly looking at, we are not trying to set a target and make one big home run swing at that level, because we don't know how long this will last. Hopefully, it will end sooner rather than later, just from a humanitarian standpoint. But we have been stair-stepping sales in, and you can pick your interval here. And I'm using future prices on this, whether it's May corn or December corn. May corn right now, and this is Wednesday morning at about 11 o'clock, is trading up 8 cents at 460. December corn's trading up 8 cents at 487. Stair step in those orders, and whether you're doing cash pricing, hedge to arrive, futures only, just set it up to where you sell some at 488, you sell some more at 492, some more at 496 on December corn. The big round number, and we saw this Sunday, $5. Everybody wants to sell $5 corn, but there are a lot of people who kind of check their ego, and there was a huge amount of sell orders from 498 to the ultimate top at 499 and a half to stop the panic buying in corn, and the same to a lesser extent in beans. But when you look at this at 1237 on old crop beans, up 22 right now, November up 14 to 1167 and a half, you're getting to levels where sales have to be made, because like I said 2 months ago, we never saw these prices materializing until much later in the year with a weather problem or substantial cut in the bean or the corn acres, for example. So, and the same thing with beans, stair step, maybe you widen that interval a little bit. You sell some futures here at 1167, then at 1173 and 1179. But you just keep rewarding the rally if this is going to continue, because you look at November beans and you're within, today you're within a nickel of Sunday night's high, which puts you in a position that this is the best price that we've had in months. Easily going back to last summer, if not even longer ago than that. I'm having a little trouble with my chart right here, but this is an opportunity we didn't see coming. And what we say is you always reward rallies, and then you find out why it's rallying after you've made a couple sales. Because if you wait to understand everything, you can end up in a situation like Sunday night. Let's say you had a whole bunch of sell orders and were aggressive that you wanted to sell some corn at 496. Even though it got higher than that, 496 would have gotten filled. You would have woken up Monday morning after that would have been filled somewhere about 1 o'clock in the morning. You'd have woken up Monday morning and you just said, "Oh wow, I would have sold some corn had I been here and seen it at 496, but it was at 489." And then all of a sudden you're thinking, well, I'll just wait for it to get back to 496 before I sell some because I had a chance at that price. But what happens, human nature, and we're still not back to 496 even after all of that this week. And not saying that we can't get there, because I'm still, under the right circumstances, still bullish like $5 plus corn. But I am in a situation that none of us know where the top in this thing is going to be. And we know from 2023 in particular that if you are waiting for bigger and bigger rallies, at some point you put in a top, and you won't know that until days or weeks after, and that opportunity will be long since gone. So you have to reward these rallies on the way while they're going up, and remember that you've got 27 crop to sell, more 26 crop to sell to take advantage of this. So this is not just wow, I've only got these bushels from last year, or only feel comfortable because my insurance on this year. You've got really, if you've got old crop, you have 3 crop years of production to sell into this rally. And sadly, these are the best prices that we've seen in 3 years, just about.
It's kind of a get it when the getting's good, isn't it, Jody?
Yeah, our markets move so fast and with so much speculative and fund money in it. When they make a decision to either buy or sell, these markets, the volatility, it gives me a headache every day watching it, because you have to have a plan, have it in place, because I don't know anybody whose brain stays calm when we have this type of volatility. You're just seeing stuff, and not that you panic, but you don't make as clear of a decision as you do as if you have those orders in, and say, okay, I'll be happy if we get there. Then if it gets there and keeps going, I'll be happy to sell some more.
It's very interesting. Last week I was in Washington, D.C., Jody, and we think about all of the things that we've discussed on this podcast to this point. We've talked so much about, the war in the Middle East. We've talked about the Straits. We've talked about the impact of Russia, Ukraine. Still, that war is still going on, 4-year war. We look at weather patterns. And when I was in D.C. last week, we're seeing still a lot of chatter with the Farm Bill and potentially, you mentioned EPA earlier. There's a lot of movement, a lot of things happening there. E15 is still a real thing. The Dems put some pressure on the Republicans by sliding that in some language. So there's a lot of things still happening that could certainly impact, the grain markets, specifically corn in this case, for corn growers and soybean growers as we get ready to plant 26.
Yeah, just what's going on, everything around Washington. And, we still have a partial government shutdown, which we're fortunate that we're not feeling, because the reports are still coming out, because they funded the USDA through, I believe, the end of the year, if I'm not mistaken, and the first bill that reopened the government. So we're not seeing it as acutely. We've got a couple flights to make the rest of the week to get back home. So I'll be curious how many TSA agents we see.
Yeah, and so far so good. At least the flight I've been flying all week, and not a problem. But that could be short-lived as well.
Yeah, it's just there's so many things to keep up with that you think you're going to be exactly in the right place at the right time to make that decision, get the price you want, and get your buyer on the phone with everything that's going on. I would encourage you to have a better plan and make sure you have those orders in.
Jody, I want to thank you for joining us here on this bonus edition of the FieldLink Podcast as we deep dive into some of the impact and some of the global wars that are taking place right now, and some of the challenges throughout the Middle East, and what that really means to corn, soybean, wheat producers across the United States. Thanks for joining us, Jody.
All right. Thank you, Bill.
Thanks for joining us on this bonus episode of FieldLink. If you don't already subscribe to the FieldLink Market Report, be sure to log into helenaagra.com and sign up for our free daily FieldLink Market Update. And be sure to sign up for the text messaging service, where you will receive market alerts on your mobile device when the markets matter the most.